Hey traders, Nick Shaheen here looking at Twitter after the disaster earnings reaction. Didn't call it a disaster report. I guess it's in the eye of the beholder, but it's definitely, it was not perceived as such on Wall Street. So from here, where could it go? I know this one technically plays out pretty well. We've covered it before, so just a quick recap as to what happened. The management message was that user growth was strong, but they had some technical issues in ad delivery or some BS reason like that. It just sounds like, oh, and then they said they're cleaning up the platform, etc., etc. Sounds like a bunch of excuses to me. Those same challenges, I'm sure, are everywhere in all social media, and to hide behind them, I think, is kind of a small thing. I don't know. It just came out wrong, in my opinion. Having said that, the company, I love the platform. I'm not a critic of that. I use it all day, every day. This is the best way to get news, in my opinion. If you have enough intellect to sift through what's real and what's not, what's important, what's not. So from a price to earnings perspective, it's not that expensive at 15 PE. This is trailing PE, trailing 12 months, so they look back 12 months actual. But what concerns me is that 8 times sales. So it's not dirt cheap. To give you absolute reference, Apple PE is about 20 now, maybe a little bit more now that it has spiked. But it's 4 times sales. Amazon is 3.5 times sales. And so for it, Twitter command this much over its sales, so it's not dirt cheap. So it being at 30 is not dirt cheap. So having said that, let's look at the technicals. This is a daily chart, and you can see the big commotion here, big gap down, and then continuation. So is this a place where I start shorting Twitter? No. Is this a place where, if I haven't sold Twitter yet, is this a place where I panic out of it? No, because of a couple of things. This is where they found footing before. So on paper, these are proven support levels. And so if anything, I would do this. Okay, I would put an alert to just give me eyeballs on it if this happens. So I didn't put a line in the sand. It's just a zone. And also important to note that this was the Christmas crash. So here everything went wrong. Not just Twitter stuff, if anything went wrong, but also all the macroeconomic stuff, the Fed, China, etc. So you can consider this, I would consider this a worst case scenario with support. So it's definitely not an obvious place to start shorting it or panic out of it. So let me zoom out to take away all of these. This is a weekly chart for Twitter. So is there anything I can discern from that chart? There are a few things. The first is recently was not a place to start longs. It was a place to watch longs because of this descending trend line. So yes, if they had broken it out, they could have spiked. But for me, I put more weight on the prior fail level rather than the trend line. I don't speak against the trend line. I'm just saying that even if I see the trend line breakout, I will put my alert, my personal alert here, not here, even though this would be the trend line trigger. Depends on how fast a trader I am. Okay, in my case, I'd like to be boring. If I catch something real quick, I'll get in and out, but I'd rather have boring on my side. So I know that now it's clear that going along here was an iffy proposition. It wasn't a mistake. It's just an iffy proposition. Okay, so now, even though it looks like it's so much lower than where it was last week, it's not that much lower in this grand scheme of things. So this tells me more that it's not a reason to get out now. These are weeks. So this is all of 2018 into May before it broke out. So this now becomes an important level zone, the breakout, the neckline for this. So 34 plus or minus is important on the way up. If they go back up there, it's going to be R. Okay, so that's one note. Second note is these should be support, this zone. So this and this are definite support. That's the trigger I just put. That's the Christmas crash. That's some sort of a crash before the Christmas crash. I don't remember that one. And look at this. It's not a coincidence. And this was a neckline. Look at this. I mean, this is, I didn't plan this. I just zoomed out and look at what information we're getting. This poke right here, this poke. So clearly this is also a secondary important zone. So in the light of markets rising, Twitter should find support somewhere soon. If markets correct, Twitter is vulnerable for another whoosh lower, then you'd have to say, okay, this support failed, maybe this will hold. And then from here on down, there really has to be a reason why Twitter should continue falling. Now, they have 3 months, management has 3 months to change their tone. If they deliver a similar message in 3 months, let's just say we will be talking about different kinds of supports too. Like this one maybe, 22. I'm not calling for levels, I'm just identifying levels in what scenarios. Nothing more new. With a happy market, this current level zone should be support. Markets correct on some whacked out Federal Reserve news or some disastrous ISM 45 or 46 ISM coming this week, maybe we start talking about the Christmas crash level. In which case, next quarter, if the message is terrible, then maybe we talk about this. So these are just 3 different zones I'm talking about. Now, if we get a bounce to fill the gap, I expect some resistance above, clearly. So back to the daily chart. This is a really yummy gap, right? But it's a gap on reason. So that reason has to go away before they get the balls to fill it. That's my opinion. So what I'm saying is it may take weeks for it to fill. However, in the spirit of optimism, what I would do is I would add an alert. So if Twitter bounces, hits this level, I get an alert, I start looking at it. I can tell you that this level is going to be resistance, 34 and change, which we already talked about. So if I get in here, I better be ready to get out here or trim, because it has been pivotal, so it's going to be difficult on the way up. Now for the fast traders, they can go into intraday candles, maybe 5 minutes, and see if you can do something with that. It just all depends on how fast one is trading. So here I can tell you that this level is pivotal and that the sellers are in control. They are setting higher lows, but lower highs, it's coming to a pinch. Short-term intraday comments, 5-minute charts. If they can beat, let's call it 30, they might have a chance at trying to fight for the reins. Where are the reins at? Short term at 30 plus because of this level right here. That's my personal opinion. So if I were to choose a candle, I choose 30.1. That would give me about a 3-penny buffer above this candle right here. Again, that's my personal preference. Again, I don't like to do this. So I would prefer to sell puts into fear. What does that mean? So I can find a put premium. Maybe we'll go to 1 day. Actually, we'll go to 1 week. So back to the weekly chart. If I decide that I want to buy Twitter now, I would personally, not a recommendation, I would rather sell puts down here where I know I have support and collect money. And I would even go out to December or January. I wouldn't want to do it through earnings, so I may book it before earnings. Or I can sell an aggressive credit put spread below the absolute support and just try to create income that way. That's just personal preference. Instead of buying upside hopium, I'd rather bet on fear. Bet to make money off of fear. What others fear? They fear, 22. I say, okay, sold to you, and if it comes down to 22, I'll take your stock off your hands. So I only sell naked puts if I want to buy the stock. So anyway, this is a longer conversation. This was just an effort to look at Twitter from different perspective. Nothing in here was a recommendation to go long or short or anything. I'm just sharing my opinion of a chart. The company, I love the platform. Management, I could take it or leave it. Jack, they keep saying the right things on one hand, but then they always have something else that kind of takes away from them. So every time I have profits in Twitter, I get out.